Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, September 23rd, 2025, and here is everything you need to know as the markets close for today. The Indian stock market closed mostly lower today. The Nifty 50 slipped by about 0.13%, closing at 25,170. The Sensex ended down modestly by 0.07% at 82,102. The Bank Nifty declined more noticeably, shedding about 0.31% to close near 55,285. Overall, the market sentiment was cautious, with selling pressure visible in IT and FMCG sectors, while PSU banks and metal sectors provided some support. The broader mid-cap and small-cap indices also fell. A factor weighing on the market was the recent US visa fee hike, impacting sentiment in IT stocks. Meanwhile, the rupee ended at roughly 88.5 against the US dollar, showing minor depreciation but holding steady without hitting new extremes, which helped limit forex-related volatility today. Among the gainers, IndusInd Bank led the pack with nearly 2.8% gains, followed by JSW Steel and Axis Bank posting increases above 2%. Bharat Petroleum and Jindal Steel also made notable advances on rising commodity prices and strong order wins. On the downside, Tech Mahindra, Trent and SBI Life Insurance were among the biggest losers, each falling around 2%, pressured by sector rotation and earnings concerns. FMCG majors like Hindustan Unilever also declined, contributing to the weakness in the consumption space. Adani Group stocks saw profit booking after recent sharp gains, with Adani Total falling about 7%, though a few others in the group rallied on positive developments. Nifty 50 hovered just above key support around 25,085 during the session and managed to hold near this level. Resistance was seen near 25,200, which capped upside attempts. Bank Nifty tested resistance close to 55,600, but could not sustain and fell back below the 55,300 level. These levels suggest a cautious trading environment with range-bound action for now. The strongest sectors today included PSU banks and metals, both up over 1%, supported by firm commodity prices and positive corporate news in infrastructure-related segments. On the other hand, FMCG and IT sectors were the weakest, dragged down by profit booking and concerns over US policy impacts on visa fees. SEBI and RBI are reportedly working to ease norms for foreign investors, aiming to reduce registration lead time significantly, which could aid FII inflows going forward. The latest macroeconomic data did not surprise markets materially today, but ongoing foreign investor caution due to global uncertainties remains a theme. Crude oil prices edged higher today, supporting gains in energy and metal stocks. Gold and silver have firmed up higher by around 1 to 2%, showing global volatility and dollar weakness. Geopolitical tensions remained low today, without any fresh disruptive news, allowing markets to digest ongoing US-India trade negotiations and the impact of visa fee hikes. The market quietly factored in some uncertainty from these developments, especially impacting the IT sector. Technically, Nifty 50 shows vulnerability around 25,200 resistance, with strong support near 25,080. Bank Nifty faces resistance near 55,600, with immediate support at around 55,000. Traders should watch these levels closely for breakout or breakdown cues. Key catalysts for tomorrow include quarterly earnings from banking and metal stocks, global cues from US markets, and any further government announcements on foreign investment policies. Today's key takeaway is to be cautious on IT and FMCG stocks, given recent headwinds, while PSU banks and metals appear to be holding leadership. Keeping an eye on the critical support levels of the Nifty and Bank Nifty will help in managing risk. Traders might consider selective buying near supports with tight stops given the volatile environment. Stay tuned for tomorrow morning's wrap and send in your questions. Thank you for listening to us. Signing off from What Moved the Market. Have a great evening.